There were a few in Budget 2025. One is the participation exemption, which is where foreign dividends being received by an Irish company would be exempt from corporation tax. Now, this is a good admin benefit for companies in Ireland, whereas before dividends received would generally receive a 0% tax rate, but a lot of work had to go into it to figure that out. So this exemption is good from a tax advisor's point of view. Also included was a benefit in the R&D tax credit. So instead of getting a 50k refund in year one, that's gone up to 75,000. Startup companies who pay corporation tax, so there's an exemption for the first couple of years of paying corporation tax, and that exemption has been extended by allowing €1,000 per S-class PRSI to apply. So previously, directors' PRSI didn't apply to this. Now there's an additional €1,000. I suppose what businesses didn't get is the lower VAT rate of 9% for the hospitality section. That was one that we were looking for, but it didn't materialise. Yes, there are changes to the VAT thresholds. So the thresholds for goods is now 85,000, and the threshold for services is 42,500. So this will help micro-sized businesses, mostly sole traders, who will not have to pay VAT until their sales go above those amounts. So the changes to capital gains tax revolve around retirement relief, and it was quite complicated, judging from the minister's speech. But essentially, what happened was in Budget 2024, they brought in a stipulation that if your business was to be transferred to the next generation, and that business was over 10 million in value, then CGT would apply. Now, what that meant was these larger family businesses were not going to transfer to the next generation because they weren't going to pay the CGT. And so there was a lot of campaigning against that, because what we want in Ireland is to keep family businesses at the hub of the economy. And so we campaigned for that to be changed, and the government in Budget 2025 have changed that, so they have rolled back. So now a business, if it's worth over 10 million, can still qualify for retirement relief. However, there is a stipulation in that if the business is transferred to the next generation, and that next generation disposes of the business within 12 years, there is a clawback of the tax relief sought by the parent. So that 12 years is a long time, and may cause an administration burden for tax advisors and for the companies themselves. However, in general, it is a good result, as what it does, it allows businesses to transfer to the next generation and to keep on growing. So overall, we're happy with that one. There were some changes to housing-related taxes in that the rent tax credit has increased from €750 to €1,000, so that benefits renters. Mortgage interest relief so that credit has been extended in this budget, which is good, although that relief is very difficult to apply for. The Help to Buy scheme has been extended to December 2029, so that helps first-time buyers. Pre-letting expenses in respect of vacant residential premises has also been extended. So this is where if there's a vacant premises and you spend money doing it up, you will get tax relief on that monies. So that will help landlords. The residential zoned land tax, which was a difficult tax and a controversial tax that was brought in, so that they have brought out an exemption to that. So this is where, and largely aimed at farmers, this is where if you have zoned land but yet you're using it for farming, and you don't want to pay the residential zoned land tax, what you can do is you can apply to get your land rezoned back to farming, and therefore you won't have the liability. There was two substantial changes to stamp duty in relation to property. So the first one was to do a residential property. So new rates now apply for the purchase of residential property. So if the residential property is less than 1 million, then the 1% rate applies. If it's between 1 million and 1.5 million, so the 2% rate will then apply to the difference. So the 2% on the 500,000. And then if the property is worth over 1.5 million, what you'll have is 1% on the first million, 2% on the next 500,000, and then 6% on everything above that. So that's a substantial increase for large houses and expensive houses. It will also affect investment into apartment blocks. So say someone was buying an apartment block for 3 million. The first million would be at 1%, the second, or the next 500,000 would be at 2%, and the next 1.5 million would be at 6%. So that may curtail some investment in that sector, and hopefully it doesn't, but it's something to consider. There was also a stamp duty increase on bulk purchases of residential property. So this is where you buy 10 or more properties in a 12-month period. The stamp duty rate has gone from 10% to 15%. So two changes to benefit in kind. One is in relation to vouchers, so tax-free vouchers for employees. So that has increased from 1,000 to 1,500, and that can be received tax-free by an employee over the calendar year. Now that can be received over 5 vouchers, so that would mean you could get 5 vouchers of €300, and you would still qualify for the relief. One word of caution with this is that it can't be in cash, and if it is, if you happen to give 6 vouchers, say, it's the first 5 vouchers that will apply for the tax-free benefit. So if the first 5 vouchers only add up to €500, and then you're given a 6th voucher for 1,000, that 6th voucher won't count and will be subject to benefit in kind. There was also an extension in benefit in kind for electric cars. So we've got another year of BIK free on electric cars up to €45,000 in value. Yes, there's two improvements for investments in Irish companies, and one is in relation to EIS investment, and this is where an individual can invest in a company and claim tax relief on that investment. So the maximum amount was 500,000 that could be invested by any one person in any one year, and that has increased to 1 million. Now, I don't believe there's going to be many people investing 1 million in EIS projects. However, if there are, then it will benefit small companies who are looking to get investment. There is also an increase in angel relief. So this is where an investor invests in a company and gets a lower CGT rate on an eventual disposal. So the lifetime limit on that was 3 million, and now that's gone to 10 million. That relief is still subject to ministerial order, and from the legislation that has been drafted, it looks like it's going to be a difficult relief to claim. A lot of rules, a lot of regulations, and may not be suitable for a lot of businesses. Yeah, the main winners are individuals, and if you're a working individual, then the tax band has increased by 2,000. So that basically means it's gone from 42,000 to 44,000. So a saving there of about €400. There's an increase in your personal tax credit and your employee tax credit of €125 each. And also then if you're retired, there's an increase in your social welfare payment. If you're on job seekers allowance, there's an increase in that. So everything really, any kind of social welfare payments received, there's going to be an increase in there. There's also a benefit for newborn babies, so you get a double child benefit on the birth of a newborn baby, which is also good for children, and good for young families. So really, the main winners here are those individuals, and really what the government have prioritised is individuals and allowing them to have more money in their pocket, which means that hopefully, from the government's point of view, they'll go out and vote for them in the next general election. And because of the amount of money they've put back into everyone's pocket, they were then curtailed in what else they could do, and hence we're not seeing that 9% reduction in the hospitality sector. Yeah, so there has been increases to capital acquisitions tax thresholds, and they have gone from 335,000 to 400,000 as a tax-free threshold from a gift or inheritance from a parent to a child. From a relative, it's gone from 32,500 up to 40,000, and then from a stranger, it is gone from 16,250 up to 20,000. So this is the first time there's been changes to these thresholds in, I think it's 5 years, and the reason why these changes have come in is because the value of property has increased substantially in the last number of years, and a single child receiving a family home from their deceased parents could end up paying inheritance tax on that house if it was worth over 335,000. Now they'll still do it, but we're getting that increase up to 400,000, which protects that child a little bit more. Yes, so this is a situation where a parent was gifting farmland to a child. The child was either farming that land or renting it to a full-time farmer for 6 years, and as a result, there was a lower capital acquisitions tax liability on the child. So what the government have brought in is basically they've said that the parent must have owned and farmed that land for 6 years prior to the gift to the child, and in that case then the child could still qualify for the lower rate. So the idea here is that what they want is to keep farmland in farmers' names as opposed to wealthy individuals buying the land up and giving to their child just in order to avail of a lower CAT rate.